While markets remain understandably concerned about the potential fallout from Turkey's economic crisis, its first since 2000 to 2001, and whether emerging market woes will spill over into developed markets, just as they did in 1998, there's still plenty to keep us busy on the home front as well. On the macro side, there are two possible highlights. The first is the latest UK government borrowing figures on Tuesday the 21st. June's £5.3 billion monthly deficit meant that the degree to which the government was overspending relative to tax receipts had continued to come down. For April to June overall, the deficit was £16.8 billion against £22.2 in 2017. Note that public borrowing therefore still going up, and it reached £1.8 trillion in June, or 85% of GDP. So it's not clear how much room the Mayor Hammond team has to splash the cash just yet. This chart shows how the deficit on a quarterly basis has developed over the last 10 years. The second macro highlight, if that's the word, is the annual Central Bankers Symposium in Jackson Hole, Wyoming, which will run from Thursday the 23rd to Saturday the 25th. Though I do appreciate some of you would probably rather jump in a hole than listen to yet more central bank policy speak. Bottom up, 4 FTSE 100 firms and a good number of FTSE 250 stocks are due to report interim results or release trading statements. They include gold miner Polymetal on Monday the 20th of August, house builder Persimmon on the 21st, construction firm Costain on the 22nd, building materials giant CRH, as well as NMC Health and One Savings Bank on the 23rd, and last but not least, property and construction expert Henry Boot on Friday the 24th. But the stock perhaps most capable of causing a fuss in the week ahead is mining play BHP Billiton, when it releases its full year results on Tuesday the 21st of August. As we can see here, the shares have done pretty well over the past 12 months, helped by rising commodity prices, including recovery in oil, and also the latest bounce of weakness in the pound. That increases the value of BHP's global operational assets and earnings when they're translated back into sterling. July's production update was well received as boss Andrew Mackenzie raised guidance for annual iron ore output to a rise of around 3% year on year. So, the first thing to look out for in the numbers will be output guidance for the company's key raw materials. In terms of the headline numbers, analysts are looking for sales of around $46 billion, up some 20% year on year, with reported net income rising 22% to $7.2 billion, or $1.73 a share on an adjusted basis. This chart here shows the 10-year trend in adjusted full-year earnings per share in dollars. Analysts will then be watching the full-year dividend, which is forecast to reach $1.20 a share, up from 98 cents last year, and that would help to banish the memory of 2 consecutive cuts in 2015 and 16. A payout of $1.20 would equate to a yield of around 5.5%. The shares have also responded favourably to the $10.4 billion sale of its onshore US shale oil and gas assets to BP, a deal that was announced in July after the financial year. So it'll be interesting to hear what Mr Mackenzie plans to do with that cash. With net debt already within the company's target range of 10 to 15 billion US dollars, further increases in the dividend and share buybacks could be on the cards. Although the miner is still facing pressure from activist investor Elliott. It remains to be seen whether everything the company's done so far keeps it happy. In 2017, the hedge fund manager published a plan which said it would boost shareholder returns, calling for the scrapping of the dual UK and Australia listing structure, the demerging of the American petroleum operations, and the launch of a share buyback. Some of this has now been implemented, but BHP Billiton has so far refused to budge on the share structure. So let's see what develops. As a final point, watch out for any comments from Mr Mackenzie on 4 other issues: a potential strike at the Escondida copper mine in Chile, the negotiations surrounding the Brazilian government's $41 billion civil claim that relates to the 2015 San Marco dam disaster, any talk of cost inflation, an issue to which Rio Tinto alluded alongside its interims, and also a fresh slide in iron ore prices back to $70 a tonne, amid concern of what talk of tariffs and trade wars is doing to global steel demand and the economy more generally. The latter two, it may explain why analysts actually think that earnings per share will fall at BHP Billiton in the year to June 2019. Thank you for watching, and I look forward to seeing you next time.